Okay. Hello, everybody. Welcome to the webinar for February 2025. A little different day here, a little later in the month, and a different day here. So thanks for joining us on a Thursday instead of the typical Wednesday. And we are excited to show you guys today some market updates and also a natural gas tutorial. I know Allie's prepared some good stuff there. We kind of give the basics of natural gas and how to get started there. Let's give us about another minute or 30 seconds or so for some more people to join, and we'll go right into it. All right, well, let's join here. Let's start it up here again. My name is Scott Ebling. I'm Director of Pricing and Strategic Solutions, and with me is Allie Black. She is our manager of the Pricing and Strategic Solutions team. We are very excited to host this webinar again this month. We're going to be talking a little bit about a market update and what and how to really get started or really some tutorial here on the basics of natural gas and the natural gas markets. So with that, we'll get started here. Allie, why don't you take it away, go over the agenda here a little bit. And well, first of all, I'll go over this real quick. I'll print out to you. We're first going to talk about Box today, give a little market update, and have a nice natural gas tour at the end. So take it away, Allie. Let's hear about Box.
Awesome. Thank you, Scott. Good morning, everybody. Happy Thursday. Before we get started and get into our market update and our feature, we want to take a minute to just introduce ourselves. We are Broker Online Exchange, and we are the ultimate commercial energy brokering partner. We provide independent energy brokers and affiliates with access to all top electricity and natural gas suppliers, instant pricing, and cutting-edge software, all supported by industry experts. Box has become the largest energy network of agents, brokers, and consulting firms in North America. And as I said last time, the last time that everybody voted at the Energy Professionals Association, we are also the best. Our goal is to connect a variety of diverse energy partners so each can benefit from streamlined, efficient options in deregulated natural gas and electricity. Our service map is up on the screen, so you can see how you can scale your energy business if you're only operating in Texas, only operating in Pennsylvania, only operating in Connecticut. There's definitely opportunities in the rest of the deregulated areas. You'll see those natural gas options available in green, natural gas and electricity markets available in blue, and then we have some limited availability in gray, which I'm not actually going to discuss right now, and we'll get into a little bit whenever we go through our natural gas tutorial. We'll be talking about these markets on the natural gas side a little bit more in depth. Those are limited markets with limited suppliers, but fortunately, another benefit of working with Box and part of our value proposition is our supplier network. So the next slide, you'll see probably some brands that you know, including Direct Energy, Constellation, Engie, some of the big guys. We also work with a variety of our niche energy suppliers who offer their regional expertise in order to give us an edge in their specific markets. This is especially important whenever it comes to natural gas, but I've been saying a lot lately that not every supplier is created equal, and that everybody has their own flavors, everybody has their own strengths, everybody is good with a different product mix or can be good in a different market. So our resources and part of what we really love to do is figure out what the best match supplier is, just depending on the needs of the customer. Oftentimes we find a very complementary partner within our supplier network, and we get to make those good connections. The next thing to know about working with Box is just about our strategic solutions team. In addition to giving you a dedicated account manager, in addition to providing levels of payment flexibility, in addition to not charging a subscription fee the way that some of our other platforms do, there's a ton of benefits of working with Box, but one of the big ones we think is our strategic solutions team, and that's led by Scott and myself. And that's really to support our larger deals and support complex customers. So that's strategic procurement solutions, it's usage analytics and budget reporting, it's heavy duty contract analysis and negotiation. Whenever we're digging into our product mix and we're saying, okay, well, what if we were to fix half of it or some of those pieces? Is this piece really going to be fixed, or does the supplier still have the option to pass through something if we get a change in law, or if the customer changes their business operations? Those types of things are things where we're experts in arranging those contracts and negotiating them so that there's no surprises throughout the term. This really, the strategic solutions team supports a consultative sales process. We use our pricing optimization models to see where we believe that the price should be. We have built those internally. We provide sustainability strategies and benchmarking, as well as RFP management and execution. Regardless of what type of support your customer needs or what their goals are, ancillary to optimizing their energy cost, which is really where we come in, we offer a lot of benefits and services, just ways that we really want to go above and beyond for your customers and help them and give them the tools that they need, again, to optimize their energy costs. With that, I'll hand it back to Scott if there's anything that he wanted to add about Box before we get into our market update.
Yeah, I just want to remind, thanks, Allie. I just want to remind everybody on the RFP management execution with that. And one of our tools we use often is the reverse auction platform. We've had some good success with this, with deals of getting them through. And again, this is not, where our most successful kind of brokers are utilizing this and really getting success in gaining more deals, winning just to get the right to bid them, and winning the kind of the consulting kind of agreement, whether that's an actual agreement or typically it's just kind of a verbal, like, yeah, go ahead, is through utilizing this as, hey, this is just a part of how we do it on the last day. On the day you're ready for contracting, this is just a part of our process that gets you that extra. And it shows you how you can show something different to the customer, because we all know that to win deals, to win contracts, is you're going to have to be different and show something different than your competition. This is probably one of the most competitive businesses in the world, it seems. I'm kind of really throwing it out there, but it is a very competitive business. A lot of competition we all have on this, and one way to separate yourself is with the reverse auction. So with that, we're gonna talk to Allie here in a little bit later, the natural gas tutorial. I'm gonna go into a market update right now, but let's take a look here. I'm gonna actually show the second page here first. Just want to show you, this is the shift in the curve from last month we talked, which is a month ago, 1/1/2025. That's the blue line. This is the shift up in gas prices on the forward curve. This is each month of the curve, each month, how much the cost is of gas each month going out. And you can see the big shift here in the front going out through next winter. And then the delta really kind of, kind of comes in, and it's not really much of a delta, or delta lessens. So, but the big reasons why is the storage. We're going to go into that in a second. But with that, I'll show you the total gas move. And it's like we had about a 53-cent gas move in 2026. Roughly around the next 12-month strip was more like 65, 70 cents. We said last month on the call that if the winter weather continues, cold forecast continues, and it continues on for the next month, that we're going to have a 50-cent move in gas. And that's pretty much what we did. And so we're now at 4.30 in 2026. Pretty high for a prompt month year. I haven't seen this high for a prompt month year in a while. That means that we're not in the year yet. It's the next year, this early in the season. But 27, 28, we really haven't had as much movement. You can see in the prices here as well. ERCOT keeps moving higher. PJM, again, all these movements in 26 are normal for the gas price, nothing different. You can pretty much see this. ComEndo, Ameren came in a little bit. Again, just basically some supply demand stuff behind the scenes. So with that, I'm going to move on to show you some more LNP stuff here. This is ERCOT. This February was up until yesterday, I believe, and we've had some movement here in the last, well, I think it's up through Monday. I believe the last 2 days now, we haven't updated this yet, but it's still not going to be a huge difference. We're probably close to pushing around $30 for this month right now. This is right around 28 right now so far in February, but still very low compared to we've had in other winters. You know, I was talking before the call, talk here to Allie, and you know, really surprising how, you know, we're hitting some pretty bad weather here, somewhat comparable we had in Uri and load levels, but nowhere near the issues going on in the grid. So ERCOT's has done a fabulous job. We talked about we worked over the summer as well, you know, hopefully that continues there for everybody. Let's see here. This is the PJM. And again, they've had some decent price movements there. Been a cold winter there as well. January, we hit up around the $70 level. This month, we're hitting around $45 to $50 level. Again, somewhat tame compared to some of these winters we've had before. But definitely some LP movement. So now the last 12 months is 37.14 here in gas. And, you know, that's really kind of much lower than, of course, what the forwards are going for. Did want to bring this up as well as we're talking about PJM. And this graph shows you in the blue is actual auction results. Want to clarify that right off the bat with this chart. Blue is actual auction results. This is a megawatt hour per year. So if your customer has a PLC, that's a peak load contribution. It's make it very simple. It's what their load is at the customer basis when the PJM grid is at its peak from the year before. So last summer, if your peak was at 1 megawatt, it's when the grid was at its peak, that's going to be your level 1 megawatt. And now 1 megawatt is your level. This is what your costs are going to be on an annual basis for the period of from when it says 25, 26, that's June 25 through May of 26. So it's 98,000. So a big jump, 9. There's a proposal out there. It's been agreed upon. I don't see a reason why it won't get passed. Or there's going to be a ceiling and a floor here for the next 2 years. So of 63,000 and 118,000. So this is not going back down to this. It's going to fall into more of these levels here for the next 2 years. And of course, capacity is going to be higher here. Want to remind everybody, we actually have, as long as we can get the PLC or you have that information available, we can get a budget change ready on a customer level basis. Just contact our desk before coming in June of 25. And we can also kind of project it here at a minimum maximum level for 26 through the May of 28 as well. These auctions, this is going to be in July. This one will be in December. For 26, 27 is going to be in July. 27, 28 is going to be in December. Those auctions are still expected on timeline to take place. So we want to put everybody out there on what's going on there. If any questions, just feel free to contact our desk or get in touch with our desk or ask at the end of this webinar. Storage, just updated this chart. This one, new storage levels came out, or update came out 30 minutes ago. Look at this plunge. This is one of the bigger drops we've seen, and this is going to go even more since this is not even updated for. Remember, this is updated even though the storage got updated today at 9:30. That isn't for what the weather was and what the storage levels are at 9:30 today. That's as of last Friday. We've had very cold weather here this past week up here in Chicago, out in the East Coast, down in Texas, the whole Eastern interconnect. I know there have been freezing temps down in Northern Florida. So we're going to probably have close to a 300 withdrawal next week, which is going to put us into this, you know, right around at the end of February, right around this level right here, right? This is probably one of the largest this is the largest first 8-week withdrawal for the year in history. We are on target to probably, if we have a normal, March, we'll probably figure out right around this 1550, 1600 level. Significant drop considering we started the year out at near record storage levels. And we are going to be near the 5-year low by the end of it. And that, in a nutshell, is why gas prices skyrocketed. You can't really put it any more than that. Yes, LNG imports increased, a half a BCF. That was expected. This is the part that we don't know. And so if you're short these markets, you're short the next, 15 months, you were basically, playing a game of betting on the weather and which way it was going to go. And, your hope was that it wasn't going to go, your hope was it was going to get warmer and stay warmer and markets were going to cool off. And I'll say it again, I've said it many times, hope is not a risk management strategy. It's something I learned long ago as a trader. And when you have a short position, you don't put it on hope. You got to have a strategy. And again, a reminder, we have a lot of success in building out nice strategies, layered hedge strategy, because that is a perfect strategy. It's a good reminder for our large customers to utilize these strategies. Just for customers really over 5,000 megawatt hours a year, we have huge success in getting them into this and puts them into a contract for 4 or 5 years on a kind of a graduated hedge program. Huge success with it. Talk to any of our clients who are in this, they renew all the time. Anyways, enough about that slide. We got to move on here. And so going to some more fundamental slides here. This is a natural gas rig count. Nothing really much to see here. Really stagnant. We had this big downfall over like a 1-year period. Where it was at 160 actually at one point. It went down over a year period down to this 98 level. It's been pretty stagnant now ever since then. We need to get these up and going now to really ramp up the production to what we need it. And going into production here, yes, big increase here. Why? Prices are higher. Of course they're going to go. This is now what they're doing. There's much more discipline out there in the fields and the money behind it. So we are not just drilling and losing money. We're drilling to make money, and thus the big increase. I think we're actually hitting 107 or so here. We're starting to hit these kind of levels this week. Prices go down. This will kind of drop down again. A lot of these are also what is called drilled uncompleted wells. They have this in inventory that they kind of want to let go. And we need to kind of really increase this greatly still for the future. And this is going to stay at these levels or a little bit higher just to get us back to normal storage levels at the end of the season. This is a slide here, LNG export capacity. We've shown this. Yes, we're at 16 BCF a day now, and it's increasing here. We expect end of 25, beginning of 26 to be around 18.9. So this is going to keep growing. These are actually ones that have been approved. So these are going to be going through. Here is a slide here on, well, yes, we had an update since our last meeting on the internal forecast from PJM on the load growth and the expected rise 183,000 by 2030. This is peak load forecast. And I just want to let you know the winter forecast, we just hit 145 already, 1 point this year. So winters are rising. The winter levels are rising as well, but this summer will be the peak. And this is up, 9.5% from what we had last year and for the 2030 forecast and 16.9% for 2035. There's also, I put some stuff out there. I know I put it out there that, these forecasts may be a little higher than not taking into account some of the technology innovations that could potentially happen and needs and inefficiencies. So we don't know. So I'm just trying to keep a level head ourselves when we're looking at this, because this is a PJM internal forecast, but it's still startling to see this. And let's continue. And now just the last one is just the chart of the month here. And another one we just kind of produced here, we just want to show you this here, and that this combines all the potential demand growth levels, and that's LNG exports, power burn, and Mexican exports. And you see the big one here, of course, is LNG, of what could happen. This is by 2030. Low base scenario. There's not really much of a difference in power burn and Mexico exports, but a low base scenario just means there's kind of regulatory, there's project issues with the LNG. A medium is everything's kind of going right. High scenario is LNG. Of course, with the new administration in, that they are able to ramp up and speed up some of the growth in LNG. And of course, all that matters is the market to absorb it as well. But at the end of the day, these are all scenarios. So the low case scenario is 15 BCF, which means we need to increase production 15 BCF a day for sure. Mid-range is 22. This is by 2030. That's in 5 years. And so we need to make sure that we get that going. A lot of, and before I hand it off to Allie, it's a lot of talk out there of prices. We're going to go down, and hopefully that, administrations that come in and people have control over pricings, that they really don't. And I just want to put that in markets. Markets are markets. And at the end of the day, it's economics. And economics means supply and demand, and it's basic, economics 101 that we've all taken those classes. Some of us, including myself, fell asleep in some of those classes, but we all took those classes, right? And as you see here, this is a chart here showing how demand's increasing. And so, yes, prices can go down if supply increases more than demand. And right now, we're just kind of hoping and really kind of needing supply to just keep up with demand, just to keep prices stable, not down, but stable. We also showed how capacity prices are increasing. We also showed how, demand on the demand, low growth demand is increasing, and that's just not in PJM, that's in ERCOT, it's everywhere, right? So we need to really get prices down and get them lower. We need supply to increase, and we're not seeing that as much, and so that's the worry in the market. And with that, the market will stay in more of a bid level, more the tendency to kind of have more of a floor than a ceiling. And we expect that to continue going forward. And these are the kind of charts to show to your customers when they're talking about, well, I heard that prices are going to go down. I heard they're going down. I heard someone has control and they wave a magic wand and make prices go down. So just be, understanding of, it's about economics in the end, and it's about these companies making money. Generators and natural gas producers, it's about them making money, and they're not going to produce anything unless they're making money. I'll let Allie, any questions, any of that, just let us know. I'll let Allie take it over with natural gas tutorial. Thanks.
Awesome, thank you for the update, Scott. It's good stuff and definitely relevant to our natural gas tutorial that we're going to get into. I love that we're doing this tutorial at a time when it's so relevant for all of us. So, and I don't know that it would be if it wasn't quite so cold outside. For all of my fellow Texans, I really hope you're staying warm. I know at least here in Dallas area, it's about 18 degrees. So, but I hope everybody's staying warm. Hope everybody's got their power, got their hot water, etc. Getting into natural gas, we wanted to do this tutorial just understanding that maybe some of our consultants have only worked in deregulated electricity markets, particularly those who are in our great home state of Texas, where natural gas is a little bit limited in terms of the choice market. We'll get into those types of details a little bit later in terms of the service territory. But we really just wanted to take a step back and look at natural gas as a whole and go through some of the basics. A lot of these basics are going to be really fundamental to understanding electricity prices and have implications for the markets that you're working in. So even if you're not particularly interested in natural gas, its relevance to electricity should be important. So just 101, what is natural gas? Natural gas is a vital energy source. It is fuel in the United States, supplying approximately 42% of the nation's energy needs. That's huge. We'll look at a chart that looks at our different fuel sources and our mix on the next slide. But for now, just understand that natural gas is a huge part of our electricity generation. It's a huge part of our energy needs, serving our energy needs as a whole. So it's very important in terms of how our supply, our demand, our storage levels, what prices look like both now and into the future. It's also important to understand natural gas is a commodity, just like oil, corn, coffee. Futures contracts are traded publicly on exchanges like the New York Mercantile Exchange, aka the NYMEX. We'll get into the NYMEX and that index a little bit more, but it's important to understand that with commodities, we have futures markets. We have, like Scott was saying, we have markets for these, and those markets are based on supply and demand currently, and what as far as we can see into drivers in the future. So watching these markets and looking, okay, are we going to have enough gas to get through the next, to get through the next winter? Things like that are things where a lot of different stakeholders all across the different parts of the industry are looking at these markets, looking at natural gas. Natural gas is essential in many industries, and we'll get into a little bit more of the demand side of the supply and demand conversation, but it's essential in a lot of different industries for many different purposes, not just electricity generation, but also heating, manufacturing, and cooking. All of those purposes, this is something that we cannot live without, just like electricity, and something that we can tend to take for granted. We can tend to take our infrastructure for granted, we can tend to take our supply for granted, and digging into the looking at the pricing levels, looking at where this stuff actually comes from, can be really informative. So next slide, we're going to look at our generation mix, and we're going to look at exactly how much natural gas the United States uses, what portion of our generation mix comes from that. So you can see with the turn in about 2008, natural gas started to take a much bigger role, and we really started to decrease our coal usage. That was good to help us meet our emissions goals. And if we have some coal coming out of retirement to help us meet peak demand, that wouldn't necessarily surprise us moving forward. We may need to take a little bit more of a all of the above approach. But again, look at how big of a share natural gas is here in the blue. Look at how big of a share it is of our generation mix, and has been. And it's really done nothing but grow. Our domestic supply, which we'll get into, has been very strong over the last decade too. And with the invent of new fracking technology and the discovery of some natural gas shale plays, things like that, we've really been able to produce as much as we need and then some, as much as we need and then enough to freeze it and send it across the ocean if we want to. We'll get into that a little bit more. But again, just looking at these generation sources, we see the huge role that natural gas plays. Getting into our basics, getting into our supply and demand, like Scott was talking about, this is really just economics 101. We have a limited supply of an item. If people want it, that is the demand. Depending on how those numbers relate to each other, whether we have more demand than we have supply, that's going to raise your price. If you have a glut of supply, you have way too much supply and there's just not that demand for it, you're going to have to drop the price to sell it. And natural gas works the exact same way. We watch the market every single day, but there is a very informative weekly natural gas storage report that if you're not looking at it, if you're not aware of it, then definitely take a look at it. This is one of the things whenever I was very first starting in the industry, just a year in or so, trying to make sense of prices and markets and different drivers and signals, and trying to put all the pieces together to make sense of what numbers we were actually able to offer our customers. This is one of the most informative things. So this is a key publication by the U.S. Energy Information Administration, or the EIA, They have a lot of good stuff on their website in terms of all of the different data. The chart that we just looked at in terms of our generation mix also came off of the EIA. And so the organization reports on our energy usage, our trends, our storage, all sorts of different things that can be very informative if you're looking into kind of making sense of the numbers that you're looking at, or wanting to just learn generally more about the electricity market or natural gas market in which you're operating. This weekly report, like Scott said, comes out every week at 10:30 EST, so 9:30 for us folks Central. I always really enjoy Thursday mornings because I know that I can get at least one cup of coffee in before things get crazy. Because oftentimes the market responds to this storage report, and we have some adjustments a little bit later in the day, so the top of the day can be a little bit slower. But the report serves as really a national economic indicator, helping assess the adequacy of supply to meet demand. Traders, investors, producers, suppliers, and policymakers, right? Researchers, analysts, consultants, all use this report, all use these tools, and are looking at this same data to gain insight into market dynamics and inform their decisions. So if you're looking for more information, if you're looking at, okay, what is pricing doing and why is it doing that? Natural gas is going to be your indicator. Looking at this chart, we just hit on it with Scott, but I wanted to bring it back up just in this context, because looking at our supply and demand, it's really easy to understand, okay, we've got a national storage number. As we go through the winter, we make withdrawals against that storage bank. Yes, we are still producing natural gas as a nation, but our net consumption is, our net storage is negative because we are consuming more for heat that generally than we are producing. And that's what's known as withdrawal season. So you'll see those dips all the way through December, January, February, etc. Then throughout the shoulder season and throughout the summer, we start what's called injection season. We're not using as much natural gas for heat. We're not using as much natural gas for even electric generation in some of the shoulder months, or if we have a mild summer. And so all of that natural gas that we don't use gets banked into storage, and we watch that net number climb. That net number means everything in terms of how volatile the market's going to be. If we know that our storage reserves are at the top that they have been for the last 5 years, great. That doesn't mean, that doesn't really support any volatility. It says, okay, we've got enough natural gas. Even if we were to make really big withdrawals, we're probably going to be okay. But that school of thought can also be really flawed considering the load growth that we're looking at, because as Scott mentioned, we began this season very, very much near the top of our storage levels, near historic high storage levels. And due to the severity of this winter and due to the amount of natural gas that we have withdrawn from storage, we are now below a 5-year average and closing in on a 5-year minimum. When we get close to those minimum storage levels, and should we see this trend continue, should we drop below that 5-year average and have the lowest storage levels that we have in the last 5 years, that is a signal that our supply is running tight. And in a situation where our demand is not going anywhere and is just growing year over year, month over month, that will signal that prices will climb. So we can expect higher pricing levels and volatility the closer that current storage levels get to the 5-year low. Conversely, we can expect to be range bound when storage levels are healthy at or above the 5-year average. Range bound, what does that mean? Basically, that means that our supply is healthy. We've got, we may or may not have a decent amount of storage, but production's looking good, supply is healthy, demand is stable. Natural gas producers are going to then watch pricing levels very carefully. They're not going to glut the market and bring pricing down, because that gives them less profit. They're, again, selling into this market. So price depression is not great for people who are producing natural gas. They don't want to flood the market. They will stop producing if pricing hits levels that are low enough that it's not it's not profitable for them to continue production. So you will see kind of an intentional constraint of supply when pricing levels start to dip low enough. On the other hand, whenever we are running through our storage, whenever we are running through our storage, making all of these withdrawals, we have booming demand for natural gas. We have booming heating demand due to a very cold winter. There isn't necessarily a magic wand that we can wave on the other side to double our production overnight. So upside volatility and upside risk is a much bigger part of this conversation. If pricing levels have the opportunity to come down, great. But if you're noticing that pricing is stable, it's steady, it's dragging, it's looking like it's been, over the last few months, really just hanging out between 325 and 375, that might give you a signal that we're in a very stable market. That said, we're always one season away from a big change, and this winter is kind of the proof of that. Getting into another couple pieces here, just the impact of liquid natural gas and our liquid natural gas supply. We talk about LNG, and I wanted to hit just very, very briefly on RNG as well on this slide. Our LNG is liquefied natural gas. That's natural gas that's been cooled to approximately 161 degrees negative Celsius, which transforms it into a liquid. This reduces its volume incredibly, so it allows efficient storage and transportation, especially over long distances where pipelines are not available, aka oceans. The US is currently the world's leading exporter of LNG, and exports averaged 11.9 BCF a day in 2023. That's a 12% increase from the previous year. That's a substantial increase. And again, as Scott was talking about, as we build this LNG export capacity, as we build these ports, the more of that liquefied natural gas can absolutely just leave the United States. Again, we can, to some extent, control how much natural gas we want to keep and how much we want to sell overseas. But the bigger driver, like Scott said, is markets, is supply and demand. Can I sell liquid natural gas for 50 times the amount that I can sell it overseas, for 50 times the amount that I can sell it here? If the answer is yes, then that may be where that gas is headed, regardless of whether or not we want to keep it here or need to keep it here. So exports will affect that domestic supply and pricing, and thus our liquefied natural gas, our export ports, and the plans to build out those ports, expand that export capacity so that we can get more of it into exports, is a big demand driver that we see ranging into the future. Conversely, if we have LNG export, if we lose a port, I know we had one that went down not too long ago, and we had a significant dip in the natural gas market. If we have any ports that go down and our export capacity is compromised, we are forced to keep more gas than we want, then obviously that's something that could further depress prices. We've talked about LNG. I wanted to hit just really, really briefly on RNG, or renewable natural gas, biogas. We're looking at RNG, as I know several other suppliers are, and looking at how to pair renewable attributes, RECs, with MCFs, CCFs, therms, and units of measure for natural gas. This can be done, and if you're looking for carbon offsets for natural gas usage, let us know. You can always purchase RECs. You can always green up your purchase by putting renewable energy credits on it, regardless of what quantity you have. If you're wanting to invest in the renewable economy or offset, those options are available. And keep an eye out. We may have additional RNG opportunities coming soon as our suppliers begin to offer more and more options in that space. Now, bringing us back to our choice map, let's talk about natural gas choice. It's not necessarily everywhere, and it's a little bit more complicated than electricity choice. Where electricity choice is pretty much a binary, you are either have it or you don't. Maybe some markets have limited choice, have a lottery, but technically everybody could switch if the utility were to allow it. That's really the way the electricity deregulation model works, where Natural gas is a little bit messier, a little bit more specialized, and much more detailed due to the nature mainly of the physical infrastructure and the way all of the markets tend to move. Technically, all of the lower 48 are deregulated, but access to third-party supply in each of these markets depends on the customer's usage, their rate class, and their location. It also depends on having suppliers to serve the market. Just because we have somebody who is a large commercial industrial user in Idaho doesn't necessarily mean that there are not third-party retailers who are looking to take on load there and looking to take on exposure. We have, in these markets, in those limited availability markets in particular, we tend to see, suppliers come in and out as they're able to offer different value propositions and as they're able to offer different products as those markets change. That, again, is really where we lean on our large commercial industrial natural gas suppliers. We have several who are absolute rock stars at what they do. They're highly specialized in their markets, and they understand, all of the contributing factors to the ways that pricing changes, and really kind of the regional volatility that can manifest in some of these markets. So we're very grateful to them for the insight that they provide us, and we're happy to help customers in those areas, particularly larger customers. That said, like we were talking about, we do have some limitations in some of these markets. A choice market, aka most of our markets that we have here in blue and green, in those markets, most of the time, everybody down to a small commercial customer has the option to shop. The question is there a supplier who's going to take them? Is there a supplier who can serve them, enroll them, build them, etc.? In markets like Texas or Oklahoma, Kansas, some of these other markets where we may not have a choice market, it may be a limited market in terms of natural gas. For example, in Texas, where we are in North Texas, Atmos is the energy utility, and Atmos does have a choice program, but they only allow their large commercial industrial class of customers to shop. A customer has to use, I think it's at least 40 or 50,000 therms a year, which is not all that much for a medium large commercial business, but they have to be rated as industrial. It is not enough for them to be rated as a commercial meter, a commercial customer user. They have to be rated as industrial. And we run into that, all over, particularly in areas like Pennsylvania. Some suppliers may not be able to single bill a customer, may not be able to serve a choice customer, may only be able to bring a customer on if the customer is open to switching to transport service, which may not be a good move for them from the utility perspective. Again, all of those pieces and all of those specialized pieces for these markets are pieces where we have to get into the details a little bit more. But that said, we're able to provide a good level of service to any customer in these areas who are shopping. So if you are not serving gas, if you're not serving natural gas customers, if you have only been looking at electricity, if you've only been looking at electricity prices and factoring in all of our feedback as far as what electricity markets are doing and all of those drivers, we're really looking at half the story. So natural gas is important. We do have some options. It does offer additional value to your customers, similar to our products and our value offering on the electricity side. Whenever we're talking about a layered hedge strategy, a risk management strategy, whenever we're talking about digging into the contract language and understanding the different ways that the customer will be treated if they use more, if they use less, if they need to purchase more, etc. All of those things are areas where we can apply our exact same value proposition. We can apply the same strengths and knowledge that we have and the same strategies to help your customers with natural gas purchasing as well. So I think that about wraps up my overview. I really hope that it's helpful. If you have questions on natural gas, anything from what it is, what the infrastructure looks like, price composition, choice markets, etc., let us know. And if we can't answer it on the webinar, then we'll loop back with you shortly afterwards, and happy to either have a discussion or discuss via email. Scott, do you have anything to add on natural gas? I know you're the commodities trader here. So what did I?
Oh my God, not anymore. The great stuff here. Yeah, I just want to touch one point about LNG as well, and that's really for our East Coast partners we have on the call here today. One of the big things about like reasons why you have these big spikes in gas and power prices in the winter in NEPOL and the New England states and relatively somewhat in New York is because despite the fact that it was this prolific, kind of the most prolific kind of, shale area of gas in this Pennsylvania, this area right here, there's no pipe that goes to here, right? So this whole area needs actually in the wintertime on days like this will import in. They're not exporting, they're importing LNG, right? So all these ships, there's actually some other rules behind this, but really they're competing for that same gas with Europe over here. So in Europe, where it's $15 right now, that's why this gas over here is going to be much higher than it will be here. It's amazing, but there's no pipelines built here. There was environmentalists wanted to shut that down, and they did, and get that passed to get the pipeline through over there. So that's want to touch on that. There was a question here, Ellie, as well. It's basically the RNG cost. What's kind of the difference? Kind of like with REX being, I guess, to get REX, it costs $3, $4 or $5 higher. What is the kind of similar thing for gas?
That's a good question. I don't know that we have somebody right now who does a really like apples to apples comparison of like, okay, what would the green premium be per therm kind of thing. But I'm happy to investigate, and we'll make some calls. And if I can get a number, then I will happily send it out.
Yeah, it's good, Ellie. And exact number, it's hard to get, depends on the region, but I will say this, we have seen it, I've never seen it less than double of what the regular gas price is. So unlike power, where it might only be like a 10%, 10% increase, it can be like almost like 100% increase at a minimum, probably. So you have to be
that's what I was remembering. I just
yeah, I don't remember. Well, I mean, but it can be so different everywhere else. Yeah, I mean, it can be up to like 5 times higher. Like in some areas, I remember in California, we're looking at it once, and some areas going, but it's not an insignificant amount. I'll put it that way. It's not like RECs are like, oh, okay, we'll toss these on, make it renewable, and hopefully, I think those costs are coming down. Another question here. I'll let you take this one too, Ellie. What's the cost of running a reverse auction?
Running a reverse auction is totally free. It's part of our services. We built it out. We can do it anytime. We do take our suppliers' time very seriously, so we ask that your customer does the same with our reverse auction. But really, that's the only that's the only obligation that we require.
Okay, excellent. Yeah, and lastly, I see this question here is a great one. Do you believe the Trump administration will significantly increase coal production to meet the increases in power demand, which it does lower the pressure on natural gas? Yes, it will lower pressure on natural gas if that happens. Do I believe the Trump administration will unblock the ability to produce coal? Absolutely. I think that's pretty much a known thing. I just don't think with that you're going to have to also have to mothball some of these coal plants that a lot of them have been switching over to natural gas, and or if not, they're just already kind of dormant, and definitely or build new coal production plants and get that whole chain going again. Again, I don't think that's necessarily going to be a significant amount of increase. It's still not really the most economic choice. Natural gas is still more economic in the long term. That's why you won't have anything new built. And, but also want to emphasize as well, any kind of impact on, and what I do appreciate with the new administration, and I've said this many times, is the one of the cabinet positions that were really just kind of nailed here, I'm not, throwing shade at any other ones, but I'm just saying, really happy with the energy choices here. I think that they, got people in place that are trying to that know the actual market, understand the actual how the mechanics of it all works and what needs to get done. The unfortunate thing is there's no short-term kind of stuff. Like, to make these plans and the changes in policy and regulatory, there's a big lag between laws getting implemented and when it actually kind of comes to benefit the customer in the end. And I think some of these policies and some of the stuff that's going to get through, like regulatory cleanup and clean up the hurdles and making things, easier. These things are going to be, 5 to 10 years, nuclear production, all that stuff. Nuclear plant right now, you tell me, if somebody said, I got 30 billion to produce a nuclear plant, let's go build it. I got a site even planned out where to do this at. And I have approval for the site to come in from the local authorities. It's still going to be 12, 15 years for that to get built. But 12, 15 years, we need it. We need it in 5 years now, but we definitely need even more 12, 15. So you might as well get started. Just because it's going to take a long time doesn't mean you shouldn't get started. So hopefully this is the kind of nice thing that's going to be happening. But and answer the question again, I believe coal production will go higher. We actually are importing a lot more of our coal now overseas, and but coal production, I think, will increase. I think some more coal plants might, kind of be able to come back online. But again, I don't necessarily think it's going to have a huge impact. So that's it. But hey, great webinar here. We had some really good attendance. So maybe we'll keep these on Thursdays in the future. But we are here to serve you guys. So let us know what you need, what we can do to help you guys succeed. Have a great rest of the month. Look forward to talking to you next month. Thanks, guys.
Everybody.